Hello everyone, welcome back to another video, and today the market is crashing. For some this might be really bad news, but for us at Alpha Finance we like these days. These are days where we can get good deals, and if the prices keep going down there will be some really good deals. In today's video we'll talk about some stocks that might be getting into really good positions for you to buy and our short analysis of them. Let's get straight into it. The first stock that could be a buy if the market continues to go down is Apple, the largest company in the stock market. Ever since its all-time high of around 145, it has gone down about 15%. This pullback might be a good time for you to enter. Everybody knows Apple. They are known for their iPhones, their iPads, their Macs, their Apple Watches. They just did over 100 billion in the last quarter. They are such a huge company with great growth prospects in so many fronts. Besides this, they are also planning to get into the autonomous driving market, and if you want to know more about that, we did a video on it and we'll link it up there so you can go check it out. Company number 2 is Immersion Corporation, ticker symbol IMMR. IMMR works on the haptic technology space. If you don't know what this is, it refers to any technology that can create an experience of touch by either applying forces, vibrations, or motions to the user. This is a field that's poised for huge growth for years to come. This is a really small company with only about $300 million of a market cap, and over the last about 20 days it has gone down around 30%. They produce a part of the new PS5 controller, which has been receiving really good reviews. And another thing I really like about this company is that they have really small debt when compared to their assets. Some of the uses of this haptic technology can be in VR gameplay, smart vehicle displays, and one area that could really increase the revenues for this company is if they get into the VR play, but on the adult content side. Stock number 3 is AMD. Another stock that has been on a tear lately, but it is also going down with this latest correction. If you take a look over the last month, it has gone down around 15%, and if this continues to happen, we are getting to a very good level to enter. I believe that anything under $80 a share for AMD is a really good price, and if we go to the 75 or 70 mark, it is an absolute no-brainer. This is a huge company that has been innovating a lot lately and is poised to become the number 1 player in their field, surpassing Intel. They are projected to have huge growth for years to come, and this is one of those stocks that you might have wanted to buy but always felt it was a bit too expensive. It may now be reaching the time where it's not going to be as expensive, as they keep posting better and better results, and if the stock price keeps going down, their PE ratio, for example, will come down a lot. The next stock we are going to be talking about is a KERN Corporation, ticker symbol KERN. Over the last month, it has gone down more than 35%, and just today it has gone down 14%. So what do they do at KERN? It works on the MJ space. It operates as a technology company, which might not be very common in this space and is something that differentiates this stock from all the other MJ stocks. It provides consulting services to the MJ industry and works with both sides of the equation, both with the sellers and the government. As this is a highly regulated industry, the sellers will have to abide to a lot of rules. KERN helps them do this. They help with the tracking of the MJ throughout all the supply chain As this is a really small company, their financials aren't the best, we have to say, but we believe that the idea behind it might just work. Other than that, they might also be potential targets for an acquisition by another company in the MJ space or by another tracking service company. Another thing that is in favor of a KERN is that more and more states in the US are legalizing MJ and their total addressable market will increase. The next stock we are going to be talking about today is Farfetch, ticker symbol FTCH. It is a $21 billion company which operates in the online luxury fashion retail space. It is basically the Amazon of luxury items. This is one of those stocks that has been on a tear this year. I remember wondering if this was a buy last year when there was the big market sell-off and this was at $7 a share. It is now at $63 a share. However, it went all the way to $73 and it has gone down around 15% in the last few weeks. They have been growing their revenues. They have been growing their revenues a lot. It has a partnership with Alibaba, which will help them get into the Chinese market. As you may know, the middle and higher classes in China are getting richer and richer, so entering that market can really help Farfetch grow. The next stock we are going to be talking about is probably the most popular stock in the stock market, and it is Tesla, ticker symbol TSLA. There was a point this stock dropped all the way to $620. It has since then rebounded to around $700. Nonetheless, this is quite a big drop. Ever since its size, it has gone down around 20%. So what do we have to say about Tesla? The investors are valuing this company based on what it's going to do in the future. Over the last few years, it has gone up mostly based on this, but we do have to say that they have recently become profitable and we can expect the profits to increase as they are building more and more factories and there is a higher and higher demand for electric vehicles. Lots of Tesla investors actually wanted this to happen, not necessarily to buy more of this stock, but because they understood that the stock was overvalued and a pullback was needed. I personally think this is still overvalued, but this might be a good investment for you. The next stock is one we own, however, it is not in the tech space as all the other ones we've talked about. And it is Beyond Meat, ticker symbol BYND. If you don't know what Beyond Meat is, it produces plant-based meat substitutes. They have their Beyond Burger, their Beyond Sausage, among others. They recently just did a partnership with Pepsi. They have partnerships with establishments such as Starbucks, KFC. They might have a partnership coming with McDonald's with their McPlant burger. And if we take a look at this stock, it went all the way up to $192, but recently it has been going down in this last month by about 23%. Personally, our cost basis is a bit below this, under 130, and if it gets back to those levels, we might add to our positions. This is another sector that is poised for huge growth. More and more people are trying to reduce their meat consumption. In some areas of the world where the quality of the meat isn't the best, this might be an alternative, so we believe this company has a big future. The next stock we'll be talking about is Alibaba, ticker symbol BABA. This is the Chinese Amazon. It works in areas such as e-commerce, retail. They also have their web services. Basically, everything that Amazon does, Alibaba is doing the same, but for the China market. These companies are so big that they have a hand in everything, so I won't be talking about all their segments. This is a company that has suffered a lot because of some problems with the Chinese government, not so much because of this latest tech-related correction. If we take a look, in the last week it has gone down only around 8%, whereas the other stocks we talked about were down, some of them 30%, but this stock is still really undervalued. If we take the size of their business into account, the high barriers of entry into their businesses, the huge growth rates that their segments are experiencing, this stock should be valued much higher. However, as I said before, there are some problems with the Chinese government which has prevented this stock from going up. However, if these problems get surpassed somehow, this stock will no doubt be trading in the 300s, if not the $400 per share. The ninth stock we are going to be talking about is PayPal, ticker symbol PYPL. Most of you probably know PayPal. It is a huge company, $300 billion market cap. They operate probably the largest online payment system in the world. It serves as an electronic alternative to traditional paper methods like checks and money orders. We are in a period that lots of people are talking about Bitcoin being the future. However, I believe that fintech is not getting enough credit and it will be one of the disruptors in the next decades. PayPal is a great stock, huge revenues every year, the biggest company in their field, but they aren't immune to the market correction and their stock has gone down 15% in the last week or so. If this goes down a bit more, we might be getting to some really good entry points where you can probably start a position if you haven't already. If you have, this is a great stock that will probably continue to grow, so no need to be worried. The final stock we'll be talking about is a SPAC, one we've already talked on this channel and one which we believe in a lot. We are talking about Foley Trasimene Acquisition 2 Corp. Remember the 2 because there is the Foley Trasimene Acquisition Corp number 1, but probably an easier way to remember this, ticker symbol BFT. This is a SPAC that is merging with Paysafe. Paysafe operates in a very similar business to PayPal, the stock we just talked about. So what do? They operate 3 different segments: digital wallets, where they have Skrill and Neteller, eCash with the Paysafe card and Paysafe Cash, and the integrated processing. Each of these segments is expected to grow a lot over the coming years, and they are already the number 2 player in the digital wallet space and the number 1 player in online gambling in the US. Online gambling is becoming legal in more and more states, and as this happens, the total addressable market for Paysafe will also grow. As I said before, we believe that the fintech space is one that's going to grow a lot over the coming years, and we believe that Paysafe is an undervalued company in that space. Since their latest high, the stock has gone down 16%. We believe this is a really good deal for Paysafe. However, as our positions are already so large, we are only planning to add if it goes down our entry price, which is below $15 a share. And now we come to the end of this video. If you'd like us to talk about one of these stocks more specifically, and for us to do a deeper analysis, let us know in the comments. We hope you enjoyed this video. If you did, please leave a like and subscribe so you don't miss the next one.